Okay. Hello, everyone. Welcome to the inaugural 6x8 Recovery Top of Mind webcast series. I'm Jeff Higley, president of the BHN Group, and I want to welcome each and every one of you. As you know, the BHN Group oversees hotel investment conferences around the world. It's been a unique and scary time for all of us throughout this global pandemic, and the quest for knowledge is more pronounced than ever. Today's webcast is called ALIS 6x8, Recovery Top of Mind, and it features 6 of the top minds in the hotel industry. While the ALIS's focus is on the Americas, today's discussion will undoubtedly touch on topics that resonate throughout the globe. A couple of quick logistics before we get started with the conversation. First of all, you will receive a survey from Zoom when you leave this webinar, and we ask that you just take the 2 or 3 minutes to fill that survey out to tell us how we're doing, to see how we can improve the webinar for future opportunities. This is one of 6 installments of this 6x8 series that will run through July 1st. We'll also feature next week a session on Asia Pacific, and then the Caribbean and Latin America. Then we'll come back again to the Americas. One thing to note, the best way to view this is through the speaker view module at the top right. We have found that that's probably the best way, as this will be a series of 6 8-minute conversations in 8-minute increments with each of these attendees. We have a great lineup, as we said earlier. First of all, leading us off will be Arne Sorenson from Marriott International. Then we'll have Dave Johnson from Aimbridge, Chip Rogers from AHLA, Mark Woodworth from RM Woodworth and Associates, Mark Elliott from Hodges Ward Elliott, and certainly last but certainly not least, Mit Shah from Noble Investment Group. So I'm going to stop sharing the screen now, and you'll get to see my lovely face here. This is going to be a fast-paced 8-minute segments for each. We'll be adhering pretty strictly to the 8-minute limit. Our speakers know that, and we'll be pushing them along at times. So they've been forewarned. Unfortunately, there won't be any times for questions today. So please sit back, relax, and enjoy the next 60 minutes conversation. So leading off for us is Arne Sorenson. Arne became Marriott's leader in 2012 and spearheaded the acquisition of Starwood in 2016. He now heads the largest branded hotel company in the world with 30 brands and at last count 1.2 million rooms. Arne, good afternoon. Thank you for joining us. What's on the top of your mind today?
Well, glad to be here, Jeff, and hello, everybody. Thanks for taking the time to join us. Well, I talk about 2 things on my mind today. The most important, of course, is the people and the impact to the tens of thousands or hundreds of thousands of people in our industry who have been put out of work or whose business has been severely compromised by this. And of course, from Marriott's perspective, we start with the associates who staff our hotels all around the world, both hotels that we manage and the hotels that our franchisees manage. And there are far too many of them who are either totally out of work or who are getting much less work than they need or they want to have. We've said before that it has no fault of theirs. This is something that descends on all of us from another place, but I think we've got to remember that the impact to them is the most profound. And I think right behind it is our hotel owners, and they range from being small operators of individual hotels to big publicly listed REITs. And obviously, the more personal it is, the more it's a private company that is wholly family owned, where the livelihood of that family depends on the performance of these hotels. That's a tough place to be too. And so every day we start by thinking of that collection of people and the profound impact to them. I think the second thing that I would talk about is just the challenge of the recovery. And we can talk about data, Jeff, if you want to get into that and what we're seeing today. But I'm not talking so much about today's numbers as I am about the challenge of getting the global economy restarted again, getting the right balance between health care and observation of the virus on the one hand, and the need to get economies moving again and need to get people back to work. And we watch this play out in countries all around the world. We watch it play out in states all across the United States. All of us are watching as voters as well as members of our industry. And this is extraordinarily complicated stuff. And the best political leadership in the world, it would still be a challenge for them to think about, okay, how do we step back out? And of course, what we're trying to do, what they're trying to do is reopen the economy, which is fundamentally important. But at the same time, not find ourselves back into another surge of the spread of the virus, because if we have another surge, that's going to be a challenge. And there are all sorts of participants in this process. One of the ones that I'm watching carefully is, what do big corporates do? And right now we're seeing that individual travelers are starting to step back out as restrictions are lifted. They want to get back to life. They want to go see family. They want to travel a little bit. Of course, they do that first with the automobile in the United States, for example. But then you see corporates who say, all right, how long am I going to keep our offices closed? How long am I going to keep a travel ban in place? How conservative can we be about protecting our people? And while we don't want to encourage anybody to put people in harm's way or take unnecessary health risk, we do collectively need to get the economy going again. And every company needs to be engaged in doing business in the communities where they are located: restaurants, hotels, travel, and not necessarily make decisions that last into the end of 2020 or into the middle of 2021, simply because they have the power to be that conservative.
This really is a game-changing moment for the hotel industry. Bringing when you reopen hotels, when the traveling public comes back, cleanliness is going to be so important. You also have the social distancing aspect. So how's Marriott suggesting bringing hotels back up and running? Even if they've been running at low occupancies, it's still going to be a different story when it becomes 30-40% occupancy, isn't it?
Yeah, it's a fascinating time. We at the worst, we had about 1,000 hotels out of about 5,000 hotels in the U.S. closed. And they were typically the bigger hotels, which were more dependent on group business, which obviously has been devastated even more than the rest of the industry. Also a bit more dependent on air transportation to get there. The hotels that were more dependent on the automobile were more likely to be open and have been open throughout. We have seen probably 100 or 150 of those hotels that were closed reopen. And so you've got hotels that never closed, you've got hotels that are reopening, you've got hotels that will yet reopen, and that probably will happen over the course of the next month or so, many of them. And so they're all a little bit in a different place, but for all of them, I think they need to be able to deliver, particularly in these first months, hyper cleanliness, social distancing, a check-in which is as contactless as possible. Maybe that's with a digital key where the guest and the hotel is ready for it. But where it's not a digital key, maybe it's some faster moving way of delivering that key that I suppose does away with the traditional in-person welcome that we wanted to provide. I think housekeeping, of course, is one of the most interesting. I think we will be much more intense about housekeeping between guests. And probably a little bit less intensive about housekeeping during the stay, because I think both the guest and the associate is going to want less risk of personal interaction during that stay, and they're going to want to make sure that room is empty. And of course, if I'm checking in, I'm going to want to make sure that hotel room has been sanitized.
Do you have a sense for when group business, is it a 2-year, 3-year project to get it back to where it was?
Well, it's going to be interesting. I think there are small groups and big groups, of course. And so if the small group, some of that will happen right away because it can be done with social distancing in place. And there will be people that need to get together. And there may be a silver lining to some extent, but as offices remain closed, they're going to need places to pull their folks together. And some of that may happen in hotels. But if you get to the big group, you know, the 1,000 plus, where historically you might have had theater seating, where you've got people sitting right next to each other, row after row after row, we're going to have to have some new rules for that until there's a vaccine. Obviously, once we get a vaccine, you know, we will come back to normal, and that's probably, you know, we should assume that that's a year from now, best case. In the meantime, I think we can say we've got to deliver more square footage per attendee at a meeting than we've ever done in the past. If we've got, you know, 10-person round tables as a setup, maybe there are only 4 people per table. You got to do something on the food and beverage breaks to make sure that there are more stations which are broadly distributed. And we'll get some early folks who start to adopt that. But I think a lot of that comfort is going to depend on what we see day to day with the virus and its spread. And if it stays down, if it doesn't come back in the fall, if the numbers stay down, you'll see people that start to venture out and say, no, let's go ahead and hold those meetings.
Well, of course, we're looking forward. 8 months from today, we're going to be at your campus at LA Live for ALIS 2021, the 20th anniversary. So
I'm looking forward to that too.
We definitely look forward to seeing you there. So the final question for you in this 8-minute segment, Arne, is: has the recovery actually started yet? If it hasn't, when do you think it will?
Yeah, it has started, although I'll maybe finish with the United States. The world's obviously a big place. China is furthest along. Of course, this virus starts in China roughly at the beginning of the year. It doesn't show up in our business until about the 3rd or 4th week of January. But from that point until the 1st of February, business disappears, goes to down 90%. Occupancies in the high single digits, basically, across the portfolio. We have 350 hotels in China. Today, we're running occupancies at about 40%. And so you can see there's good progression. It's not just leisure travel. You're starting to see business travel. Our restaurants are open again. People are feeling good about getting out. And it does seem to be working without a surge of the virus. You go to Europe, Europe is still down 90%. And we really have not started to see much, except maybe in a market like Germany or Austria. United States, what we're seeing already is over the last 5 or 6 weeks, we see occupancy building week over week. You can see this in the Smith Travel numbers when you look at the industry as a whole. And what's happening is leisure first, drive to first. And people are getting back out because A, they can, and B, they're dying to get back out. See the family, get to the beach, do something. And of course, the places that have got the most space, which are drive to, which are personal, those are the ones that are coming back first. And that recovery will continue as long as states continue to ease restrictions. It will continue as long as the virus does not reverse and come back in bigger numbers as opposed to continue to decline. And both of those things we've obviously got to watch carefully.
All right, very good. It's great to have some optimism, shoots of optimism out there that we can build on. So Arne Sorenson, thank you so much for joining us today. We greatly appreciate you being here. Thank you.
Thanks, Jeff. Great to see you, and nice to see all of you. Hang in there.
Okay, we'll see you at ALIS, Arne. Bye-bye. If not before. Bye-bye. Okay, great. Arne, as always, very insightful and great to catch up with him. Next up is Dave Johnson, the CEO of Aimbridge Hospitality, which is the world's largest third-party hotel management company. They manage properties in 49 states and 20 countries. So Dave, are you on board? Dave, there you are. Dave, great to see you. Thanks for being here. Always great to catch up with you too. So Dave, what's on your mind today?
Jeff, it's great to see you, and thanks for having me. Welcome to everybody that's zooming in. What's on my mind is just listen to Arne's comments, and I think you'll get a lot of commonality out of the fact that associates number one. You know, we employ about 60,000 people through our 1,400 assets, and unfortunately right now about 2/3 of them, about 40,000, have been either furloughed or laid off. And unfortunately, the majority of these are hourly employees. So a lot of these are living check to check. You know, fortunate that they have an unemployment, but we've been focused on how we can, how quickly we can start to bring people back to their jobs and to make sure that we have jobs for them when they come back. So first and foremost our associates and their well-being, obviously their families' well-being, but assisting them. We actually were fortunate enough to create, and I think you covered it, Jeff, Aimbridge Aid. So we've raised over $1 million to assist our associates, and some of the stories come in with paying for medical expenses, paying their rent, buying food for their families. And I know a lot of the brands and other companies out there are doing great things like that, but unprecedented times. I mean, I've never seen anything like this in my career. I saw it. I led a company through 9/11. I led a company through obviously the Great Recession. But I think the wild card here is science, Jeff. Every other economic downturn, we had a little bit of fear factor with 9/11. But once people got comfortable getting back on planes, there was probably never a safer time to fly, with security at the airports, et cetera. And then similar to Arne, we're seeing, I mean, we're the largest, in the space by quite a big factor, but a lot of these smaller management companies, a lot of them are friends of mine, and they basically have said they're not going to make it through this pandemic. They got a 90-day lifeline with some forbearance of loans. They've got some, they've got a little bit of cash to burn, but I've talked to some public REIT CEOs who said, we work with 18 to 20 management companies and we don't think half are going to make it through this. And Jeff, 10 years ago, that was me. I wouldn't have made, Aimbridge wouldn't have made it through, if we weren't the scale, and we've got strong financial partners and a great balance sheet. But I feel for those guys because although we're a very big industry, we're also a small industry. And it's a very friendly, competitive industry. And I feel for them and their livelihoods. And then lastly, our owners and our partners, everybody's struggling. And as Arne said, we manage hotels for large institutional private equity firms, family offices, and along with, public and private REITs, but we also manage for some smaller families that got, 3 or 4 hotels, and that's their livelihood. And right now, with occupancy single digit in the majority of the markets out there, they're struggling, and we're doing the best we can to help them through this.
Dave, we talked, I don't know, geez, it was probably 2 or 3 weeks into the downturn here, and after everything kind of stopped. And you at that time talked about the importance of the travel industry as a whole working together, how the airline industry, the cruise industry, the hotel industry, et cetera, would all come together to figure this out in terms of cleanliness and just some of the operational things. Do you still feel that way today? Are the industries working together to help find solutions?
Absolutely, Jeff. I mean, obviously, we're all interconnected one way or the other. We need to get on an airplane to get to the majority of our hotels, especially resorts, et cetera. But when we're all doing well, we're all doing well. Now, we're all interconnected that way. And I know Chip's talking later, but a shout out to Chip, Brian, his leadership team. I know they're talking to the National Restaurant Association. They're talking to the airlines, the cruise industry, how we collectively as large industries get the consumer comfortable that, cleanliness is there, that we're taking the precautions to prevent any safety or safety issue concerns they have, to make sure that we bring them back, because I think it's going to be, we're all dependent on one another. But kudos to AHLA, which obviously is supported by the brands and all the members, sponsors, et cetera. Their efforts legislatively to help our employees, to protect jobs, et cetera. And also, I think the industry, I applaud the Marriott, Hilton, Hyatt, IHG, the large brands stepping up. We're following their lead on cleanliness because obviously we're licensed franchisees and we just want to support them every way we can.
How does that affect operationally for you as a management company, running the day-to-day, learning new techniques, learning how to clean things properly? Is there a big learning curve there for your employees as they start coming back to their job?
I wouldn't say big, Jeff. I would say it's a learning curve, obviously, and I think the brands are leading. Large companies are leading with proper training. The thing that I've been fascinated by is the technology is already there. We weren't using it. The cruise lines have been using, unbelievable technology to make sure that the room is spotless, clean, and free of any kind of germs. And so as we incorporate that in, our guests, and we do have guests at our hotels, and we're communicating with our guests on a daily basis, hearing from our associates, and they're very, very comfortable with precautions we're taking, to make sure, again, the room is spotless, clean, disinfected. Public areas, our front office personnel wearing masks, where required, et cetera, just to make sure that the customers are there. But honestly, since this thing went down, we have not had one guest complaint from a customer that we weren't taking proper precautions at one of our assets that we manage. Now that I said that, Jeff, I probably jinxed myself. I'll probably get one later today. But the reality is, I really applaud our associates. I know we got to give kudos to the frontline health workers out there. But in our industry, a shout out to all of our frontline workers who each and every day are going in and taking care of guests and exposing themselves to risk. I mean, those are our true heroes in our industry.
Okay. Switching gears just for a second then, Dave, it was only 9 months ago. It seems like eons ago, but it was only 9 months ago that Aimbridge and Interstate combined forces to form this really large management company. Going into this now, how has that worked for you? Has that presented more challenges, or has it presented more opportunities as the pandemic is kind of taking control?
Good question, Jeff. I mean, ideally, we would have paid a lot less for Interstate had the pandemic happened, but we probably wouldn't have done a deal. But all jokes aside, it's been great. Always in downturns, there's a flight to scale, and there's a flight to quality. And again, we've got great partners in Advent International, who's our largest shareholder, and have not had to decimate our entire corporate team, because there is opportunity. Out of downturns, we can play offense. And so they've been very supportive in keeping our associates in here at the corporate office that support the hotels. And the feedback we've gotten from our owners that we manage asset for has really been complimentary. How we've reacted and supported them through the CARES Act and PPP, how we've worked with them on receivables, et cetera. And we've had several people say, we know half our operators are not going to make it through this. Are you guys in a position to take on more assets? So again, I'm blessed. We're blessed as a company to be the scale we are because we're able to weather the storm, and there's opportunity coming out the other side.
Final 30 seconds or so, Dave, for 2 quick questions. What, yes or no, will there be a baseball season? I know you're a big fan.
July 4th, I'm hearing. July 4th is opening day, and you know what? I'm picking your Indians to go all the way, buddy.
All right, I'll take that. I'll take it. We'll take it when we can get it. And then the final question, same thing I asked Arne. Have we started the recovery yet? Or if we haven't, when will it start, do you think?
We have started. We've obviously managing 1,400 hotels and resorts in 20 countries, not quite to the size that Arne has, but with us, we have great data. And we've obviously got data on all the brand partners that we have, et cetera. But we're seeing some really exciting last 4 weeks of growth week over week. Now, we've fallen off a cliff. So, but you didn't think there'd be a day where you'd say, you know what, we ran 22% occupancy. We're happy with that because we only ran 15 the week before. But we're starting to see it very similar with Arne. Leisure traveler, they're frustrated. They can social distance on beaches, at pools. We've removed in our resorts half the furniture. We're seeing it in Colorado where people can hike and get outdoors. So we're seeing some healthy rebound in those areas. But again, transient travel, we're seeing we operate about 260 extended stay hotels. They're operating occupancies in the 40 to 50% range. So, and especially, more in that select service range. Obviously, as I already mentioned, any type of top 10 urban city is basically shut down. But we're starting to see, we've got 7 hotels open in New York City, and we're seeing climbing occupancies for 4 consecutive weeks. So I feel good about it. In speaking with the airlines, employments are up week over week for 4 consecutive weeks. So, and I think with the whole mask issue within planes, the folks, I'm going to take my first flight week after next, I think, to Miami. I just haven't had a reason to fly because there's nobody to go see. But the reality is, I think that more and more people are taking flights over the last several weeks, and a lot of them are folks that I work with here at Aimbridge. They feel very comfortable about the experience, the cleanliness of the planes, et cetera. So it's going to take time, but I think the rebound has started. But people always ask, the most asked question I get is it a hockey stick recovery? Is it a W recovery? Is it a U-shaped recovery? And I think the interesting thing, and I'll finish with this, Jeff, is I don't think we really know, because the wild card in this entire thing is science. I'll tell you right now, if let's hope these guys that were, the stock market jumped yesterday dramatically on these phase 2 trials for a couple of vaccines that they feel very encouraged by. If we have vaccine by the end of the year, it will be a hockey shape recovery. People want to get back on airplanes. They want to travel, but, they just don't feel safe and they're scared. So I think that's the wild card that, we've got this wild card of science that I think could really accelerate a recovery.
All right. Step by step, we'll get back, won't we?
Yes, sir.
Dave Johnson from Aimbridge Hospitality, thank you so much for being here. We greatly appreciate it, and thank you for sharing your insights.
Hey, thank you, Jeff. Thanks for having me, and thanks to everybody who zoomed in. And everybody stay safe.
All right. Be good, Dave. Okay, great. Thank you, Dave. We've had a couple of great speakers, and the the progress will continue. Next up is Chip Rogers. Chip has been president and CEO of the American Hotel and Lodging Association since January of 2019. Chip, welcome. Thank you for being part of the program here today. I would venture to say you've been a pretty busy guy. What's on the top of your mind?
I like to stay busy, but not for the reasons why recently. Look, top of the mind is this. The industry is still in serious jeopardy. We hear a lot of people talking about recovery. That's good. I'm sure I'll mention it here momentarily. But for the interest that we have, which are hoteliers and hotel employees in our industry, we're still in a rescue mode. So as we talk to members of Congress, we remind them, we were the first hit. We will be the last to recover. And if you want to put this in the proper context, I think we've all heard all sorts of astounding statistics that are almost things you could not have imagined back when we were at the ALIS conference earlier this year. But if someone would have told you, Jeff, that the employment in the hospitality sector in May of 2020 would be the same as it was in 1984, would you possibly have believed them? But in fact, that's what we're facing today. So we have taken a major hit. And we'll continue to take some hits, but there is light at the end of the tunnel, just the tunnel's very long.
So obviously the PPP, the incentives for the stimulus programs, et cetera, there's talk about another one in the works right now. Any thoughts on that? Any update on that, on the timing of that? Will it actually get done with the, with the partisanship that's in DC?
Well, the good news is there have actually been a number of bipartisan, almost unanimous votes by Congress for things that became law that affected the coronavirus. There was actually a bill way back in February, and then another one in March, and then you had the CARES Act in early March, and all three of those were almost unanimous, both bipartisan. And then you had what we like to call CARES 3.5, which is when they reloaded the PPP fund. And that was almost unanimous. Now we're starting to hit partisanship. Obviously, every day is closer to the election. People are starting to play politics. It's really unfortunate because virtually every American I talk to, whether they're left, right, Democrat, Republican, Independent, doesn't matter. They really want folks to focus on coronavirus, coronavirus, coronavirus. Don't get into all these topics that are kind of your wish lists for what you wish you could have happen during normal times. Let's set all the nonsense aside and focus solely on coronavirus. And when they do that, they can be successful. We will probably see another refunding of the PPP coming up here in the next week or so. That's the word we're hearing out of DC today, that the leaders, in fact, are talking about that. Hopefully, we'll see some extensions on some of the PPP requirements. One of the interesting things is that June 30th was the rehire date, because when Congress made this law, they thought this was going to be about an 8-week event. So they figured everyone could be rehired by June 30th. They now know that's not the case. And we have pushed that, we've urged them to push that back to the end of the year. We're getting bipartisan support on that. Democrats and Republicans are both agreeing with many of the things that we've been advocating for. The work that has been done by our industry, and I want to thank everybody who's participating through AHLA and getting that message out. It is absolutely working. You saw it start with the first CARES package where we were able to get hotels and restaurants separated from other industries so that they could all qualify for the PPP. We're seeing it now with all the suggested changes to the PPP. So legislatively, the work's coming along quite well, but it is Congress and sometimes it takes a little time.
What's next? What else should the political world be doing to help the hotel industry continue its road to recovery?
Well, look, when we first started this back in late February, early March, and it's almost mind-boggling to think about that time period. It seems like eons ago. I remind people we were one of really 4 loud voices that were getting hit. It was us, the airlines, the cruise ships, and the restaurant industry. And at that time, Congress was listening to those 4 industries. We had a meeting with all the CEOs of the major brands with President Trump and Vice President Pence and his cabinet in early March. And we had their attention. They fully understood it. Lawmakers were paying attention to what our voice was. As this thing has progressed along, it's every industry that has been hit. So all the lobbying firms, all the associations are now working with their members of Congress, telling them how bad it is in their particular business, their particular industry, which is why it's so important that we remain unified and louder than ever. Now, we have something with AHLA called Hotels Act. It's free to sign up for. I urge everyone who's watching me now to go on our website and sign up for that, because that is the simplest way for our industry to speak with one single voice straight to all the members of Congress. Through Hotels Act over the last 2 months, we've been able to generate about 140,000 letters, very succinct messages to all members of Congress. We need to double that. We need to triple that. We need to get to 1 million by the end of June. And with your help, we can.
So just going back for 1 second to the current, let's just call it the state of mind in Washington, where compromise is hard to come by. You, your staff, Kevin, your staff have to wear different hats depending on which hallway you're going down in the buildings. How do you send the message, the hotel industry's message, in a way that can reach both sides of the aisle? Is there a certain approach that you take to do that?
Yeah, we do. Whenever we're sponsoring legislation, when I say sponsor, I use that term loosely. We're obviously not members of Congress, but whenever we're pushing legislation, we make sure that we have a Republican and a Democrat co-sponsor that legislation. Just this last week, we had 2 examples of that in the House of Representatives. We had an enhancement proposal to the PPP that just came out, which was bipartisan. We also had a piece of legislation that we were the primary supporter of that would extend the rates, the government rates for per diem, the same rates we have this year into next year and the year after, so that they don't go down. We have bipartisan support on both. So it's critical for us that we find those issues that are not Democrat, Republican, left or right, and that we have folks on both sides willing to participate in a sponsorship role. We're seeing that happen in the Senate as well. There's a wonderful act that just came out recently. I like to call it the PPP on steroids, called the Restore Act, which was a Democrat and a Republican coming together from Colorado and Indiana, kind of middle America, with a great piece of legislation that would let you borrow up to 40% of what your revenue was last year, as long as you're in a business that has lost at least 25 to 30% of their revenue this year. And we think that's wonderful legislation that can really help a lot of people. So we stay focused on that. You'd be surprised how many lawmakers want to do things in a bipartisan way, but then they sometimes just get pulled back by the fringes, particularly as we get close to an election.
Okay, final question for you, Chip. Same as the previous 2. Has the recovery started for the hotel industry? If it hasn't, when will it?
Well, that's an interesting question, Jeff, because I think you could always say anytime you're moving upwards, it's a recovery, but you also have to recognize where you are. So if I asked that question to the New England Patriots when they were playing the Atlanta Falcons in the Super Bowl a few years ago, as they started the 4th quarter, losing the game 28-9, I'm sure Tom Brady and everybody would have said, Belichick would have said, oh yeah, the recovery starts right now. And you know what? They ended up winning that game in overtime. Now, despite the fact that I hate the Patriots and do like the Falcons, you still have to respect what they overcame. And we as an industry can do that as well. So I think we have started the 4th quarter. We may be down 28-9, but we know the ending result. We are going to win whether it takes overtime or not. And so, yeah, things are looking better, but we're still in a very rough place. And I don't want lawmakers and policymakers to misunderstand where we are. Help is needed today, tomorrow, and for the foreseeable future.
Yeah, I think help and precautions are necessary. And we thank you for leading the charge on those accounts, Chip. Thanks for being here today. We greatly appreciate it and looking forward to talking to you sooner than later.
Thanks, Jeff. Appreciate it.
All right. Thanks again, Chip. We appreciate that. Now moving on to the 4th speaker on the program today is Mark Woodworth. Mark has been consulting hoteliers and crunching data in the industry for as long as most of us can remember. Rumor has it that he even, oops, my timer's there, it's going off there. Rumor has it that he even consulted Conrad Hilton when he bought his first hotel in Cisco, Texas. What year was that, Mark? 1919. So you've recently established your own consulting and advisory practice, RM Woodworth and Associates. Mark, what is on the top of your mind today?
Well, the tippity top of my mind is Chip's last comment about the Patriots. But other than that, I was prepared to just add to the chorus of thanking Chip in the leadership of AHLA with really helping to be a critical driver of the correct path forward in our industry, for our industry, and so forth. It also reminded we had an interesting thing happen this weekend, Jeff. Chip, as you know, he's in DC, but he still has a residence here in Atlanta, so he comes back periodically. He was here. Of course, I live here. Mit is here. It hasn't been easy to get a haircut. And so I don't know if you noticed Chip's haircut. You can now see what mine looks like. We'll soon see Mit's. But Mit offered to pick Chip and I up over the weekend and take us to Mark Elliott's house. Because Mark, besides being one of the world's best transaction experts, he also knows how to cut hair. The problem is he doesn't know how to cut his own hair, which you'll see very soon when his turn comes up. But Mark, I want to thank you again for doing that. So what's on the top of my mind, Jeff, right now is—
Besides haircuts, yes.
Besides haircuts and the Patriots, is throughout my career, whenever we've gone through a real shock to the system, and we all know what over the last 20 years, the ones that we've had, the question that has always come back to me first and foremost is making sure that I know what it is that I don't know. So you try to focus on those things that are fundamentally different, what's caused that change, and how might that change as we move through on the path to recovery. I was fortunate to be on a call with a good friend, Scott Berman from PwC this morning. He framed where we are, and I thought a very interesting way, and that there's really categorically there's two things we're focused on: recovery, and then how do we prosper once the recovery is behind us. So from a recovery perspective, and as we've heard, Arne and Dave and Chip said, I mean, there's clearly green buds of optimism. I'm not sure there's any real shoots that are out there yet, but we are seeing demand picking up. I heard something yesterday from my good friends at Calvary Labs, Cindy Esther Screen, that I think a real positive sign for what's happening now is of all the demand channels that they track. For the last 3 weeks in a row, both OTA and, critically important, the loyalty channels, i.e. brand.com, are the only two that have experienced consistent increases in both occupancy and average daily rate over this 3-year period. So there does seem to be some level of momentum picking up. I think that one point is also a critical element to trying to answer the question, when might the industry get back to 2019 profitability levels? And part of that is because the brands have done a great job over the last 4+ years now of retraining the consumer to buy direct. And so overall, you get a better price and you get at a lower cost, acquisition cost. So again, we're seeing that's another example of some of the positive signs that we've begun to see as we work our way through the recovery period. So within the recovery, obviously, you do have the notions of workouts, and there's an awful lot of that going on and a lot more to come. So it's going to be interesting to monitor how the various lending groups, starting with the CMBS lenders, how they behave and work and hopefully assist work out that. And then the other is just simply surviving. Okay, and Dave touched on a number of the things that they've been doing to help accomplish that. So those are some of the things that I'm focused on today. It was interesting. I think Arne was made a reference to maybe 2023 as to the point in time when we get back to 2019 performance levels. That happens to jive right along with where my old firm, CBRE, and my colleague Jamie Lane, where their current thinking is with respect to when at the macro level in the US, we'll get back to 2023 RevPAR levels. Now within that, kind of getting to this knowing what it is you don't know kind of thing, of the 60 cities that they track very closely, only about 23 or 24 of those will be back to 2019 RevPAR levels in 2023. So it's really going to be a mixed bag of what we see over the next couple of years.
That's a little scary, isn't it? I mean, that's 3 years away. Should we be nervous about that, or is the trajectory going to be enough to carry us?
Well, nervous in the sense that that's how it becomes really critical to understanding this whole survival mode that we're in right now and the critical role that the lenders are going to play in that. So, and again, I think it's still a little too early to gauge just what that ultimately is going to look like. But the other way to look at it is I do the analogy of you drop a pebble into a pond, you'll get a ripple. You drop a stone into a pond, you'll get a very big ripple. And you drop a boulder in the middle of the pond, which is what we have now, and you're going to get a very, very large ripple. So longer recovery period, but I do think that the upside for market participants starting in 2023 is going to be probably better than anything we've ever seen. It's just going to take a while to get there.
Okay, so you're a prognosticator, a futurist. What numbers should people be watching? If you had to pick one data point within the hotel industry and one metric that's outside the hotel industry, what should they be watching to be the key indicator of a recovery?
Well, and I think I have the same answer for both, Jeff. And that is that research, as you know, has clearly demonstrated over a long period of time, there is a very, very close correlation between employment, personal income levels, and the demand for hotel rooms. So again, there's an awful lot of friction in the system now that we have to deal with. You know, Arne mentioned the getting your key when you go to check in. You know, there's a different process. There's going to be a cost associated with it. The fact that we can only use half of the space in our hotel in many cases, so the productivity of that asset is going to be diminished, and we just have to figure all of that out. But again, I would revert back to just, and it's what I do every day, is just really try to look at the overall economy within that income and employment. And when we begin to see meaningful increases in those two measures is when I think we can begin to get truly optimistic of just, number one, where are we on the recovery curve and how much further do we have to go?
Well, you teed me up with that pretty easily. Are we there yet? Where are we in the recovery? Has it started, or when do you think it will start?
Oh, well, you know, being a consultant at heart, Jeff, I have to say it depends, right? But I would say that overall, the fact that we're selling more rooms this week than we did last week, the pricing in a number of markets is getting better. I mean, those are clear signals that we bounced off the bottom. So now, once again, it's just a big question: how long is the path to recovery? You know, is it 12 months? Is it 18? Is it 36? I think the most likely scenario, again, does point to 2023 as the point in time where we get, at least at the RevPAR level, back to where we were in 2019. And if we're lucky, and I think it might have been Arne said or Dave, that if we get the vaccine, et cetera, and frankly, as consumers, if we continue to behave in a more responsible way that would serve to mitigate the spread of the pandemic, then those things would all augur towards a more quicker recovery. But again, that's big speculation on that part.
All right, very good. Mark Woodward, thank you for your time today and all of the insight. We appreciate you being here.
Yeah, hey, Jeff, thank you, and thanks, everybody.
Okay, take care, Mark.
Thanks.
Okay, moving right along. We're in the home stretch here. We've got two more great speakers to tackle here. Next up is Mark Elliott. Mark is the president of Hodges Ward Elliott. He has been with the firm since 1993, and in those 27 years, and Mark, man, when I saw these numbers, you've personally sold and or financed almost 1,500 hotels with about almost 300,000 rooms with a dollar volume of approximately $52 billion. Are you going to get close to those numbers this year is the question. But with that in mind, what's on the top of your mind as we sit here at the end of May 2020?
Well, after Mark Woodruff's comments, it's getting a haircut, apparently, is what I need to be thinking about. So I've always aspirationally wanted to grow my hair long enough to put it in a ponytail. So I thought the pandemic might be my window of opportunity, but once in a lifetime. But so you know, given where we sit at HWE, our focus is, and top of the mind has been where is value? What is value today of a hotel that's shut down and maybe slow to reopen? What's the cost of capital? What's the capital flows going to be? And what are transactions going to look like going forward? So, you know, those are the questions that I've really been dealing with since about 9 a.m. March 9th, and been on the phone ever since, kind of working through. So talking a little bit about value, we've run a few processes very quick. A typical marketing process may take 6 to 8 weeks in the market. We're running processes as short as 4 days just to see where the spot market pricing is. And our first one we ran was about 6 weeks ago. And the initial pricing in 4 days We went to 20 potential buyers. We got 10 bids, so there was a lot of activity. People were bidding all equity, and the discounts were 30 to 45%, and the seller wasn't a taker. We paused for a week, reran the same process on the same assets, and for another week, and the discounts came in to 25 to 30%. Seller's still not a taker. Subsequent to that, some of the bidders have now kind of ooched up to where their bid's only about a 15% discount from the February 1st value. So, and we're seeing where transactions are getting done right now, and we'll see them start to close in June, are in that 15 to 25% discount. But I think that 25% discounts are going to be fleeting and short-lived. And here's the reason. Is it all depends on your view of recovery. And so as we talked about, we've heard 2022, 2023 to return to 2019 levels. I think the consensus is 2023. Probably 50, 60% of the people on this call, the people we've surveyed, say that it's 2023. If you buy a hotel today, unlevered with no debt, at a 25% discount, assume that you're recovered by 2023. At the end of your 5th year, you sell it for the same cap rate as pre-COVID February 1st value. You get about a 15% unlevered return, which is really much too high of a return for no debt risk or no finance risk. So I think the market is rejecting those big discounts, and where they're going to settle in is probably in the 15 to 20% return range, which kind of makes sense if you figure very little cash flow in your first year, a little bit more moderate cash flow your second year, and kind of back to full cash flow your third year on a discounted basis over time. If you're doing a 10-year horizon investment, it works out to be about that 15%. Secondly, on the debt side, I remember back in the Great Recession when the banks were all bankrupt and insurance companies were on hold. There were very few funds, debt funds available, very few mortgage REITs. You had to go to the equity markets to get financing. And so we financed some portfolios back then at 10.5% to 12.5% interest with lockouts and points in, points out. And today we're seeing debt quotes from sub 50% as low as L400 and kind of 65% in the L700 range. So, and we're getting multiple quotes and multiple bids, which back in the Great Recession, we may only get 1 or 2 bids. So it does seem like there's much more liquidity in the market today. And then I kind of leave with one final thought. A very astute investor that everybody knows, I had this comment yesterday on a call, and he said, I'm a glass half empty guy. I'm always looking for, the problems and the challenges, what have you. But he said, I think the entire market's sitting there waiting for these massive, massive discounts that may never come. So the discounts are going to be what's kind of dreamed and what's real. And he said, I think we should act on what's in front of us, not what we potentially hope for. And primarily because if you look at like the private equity capital that's available today, it's twice what it was in 2009. So it's twice as much real estate equity capital available.
But back then, after the Great Recession, there was a lot of similar talk. There's going to be tons of distressed assets and lots of opportunities, and that never really materialized. So do you think we're going to see an extend and pretend kind of environment from the lenders, or will there be a lot of distressed assets back to the banks?
Yeah, I was on a panel back in 2009, and a lender was on there, and he said, I receive a lot of criticism for pretend and extend, but I got to tell you, it's working for me. And so, I think that's kind of the playbook today. I think lenders are wise if the owner's willing to, capitalize, put up an interest reserve, kind of stay with the asset, then I think the lender's probably wise to extend, and that seems to be what they're willing to do without too much pushback. Where that could be different is at the special servicer level, in that there's the deals that will go back to the special servicer are assets that were already on the fringe before the pandemic. There wasn't much equity left, and so they get the keys tossed back. What's different here is in the past when the special servicer got it, you still had an asset that was cash flowing operationally. Now, if the special servicer gets back, it's not cash flowing operationally. You know, the taxes have to be paid. And so there may need to be cash advanced. And so it could be a very different kind of environment at the special servicer level.
I know this could be a loaded question and we have about a minute and a half to go. So try to make it a quick answer in terms of how do you value something right now? What do you put, how do you get a value on a hotel?
Yeah, I think, you know, it's interesting. You know, we had one buyer on a hung deal, which we worked through, and they have a month-by-month underwriting for the next 4 years, which is pretty impressive to see in a kind of view. Now, their view by definition is wrong, but everybody's taken their kind of view of what the recovery looks like. And again, that consensus is 22, 23, probably with a weighting towards 23. So, and what's interesting in value is you can be wrong significantly in your years 1 and 2 if you get years 3, 4, and 5 and your exit right. And so, you know, I think people are basically, once they kind of peg the recovery year, then you can get some conviction around value.
Okay. And then finally, to wrap it up, same question. Are we in the recovery yet? If not, when will it start?
Sure. I think we've definitely started recovery just by definition that, you know, occupancies are higher now than they were a month ago. More hotels are open today than a month ago. However, you know, we may not be at the beginning of the fourth quarter. We may be in the first minute of the first quarter. I think it could be, you know, it's going to be a slog until there's a vaccine or herd immunity. But the one thing that the country has decided is that the country's not going to live in their homes any longer. They are going to get out. They are going to go to work. They want to go to work. And you really kind of see the American spirit on display. Creative, smart, doing things intelligently, and we'll do things, you know, differently for the short term. But the last point is I got asked by a client in the Middle East about a month ago. It's like, what's the American psyche on the backside of the vaccine, the backside of herd immunity? And I said, well, Google up New Year's Day 1919 after the Spanish flu, Times Square, and it's packed wall to wall with people. And so I think people want to, human beings want to be social, they want to congregate, and I think that's where we're going to head.
Excellent. Thank you, Mark. We appreciate that. Hopefully we'll be able to congregate in person next time rather than on video. Thank you for your time. Thank you for being part of this.
Jeff, thanks for having me. Appreciate it.
Okay, take care, Mark. Okay, now we're in the last but not least category, and certainly the next gentleman is one of the industry icons. He's Mit Shah is a second generation hotelier following in his father Bharat's footsteps. He's founder and CEO of Noble Investment Group, which primarily invests in upscale select service and extended stay hotels. Mit, welcome.
Thank you, Jeff. This has been a great day so far. I really appreciate you having me.
Well, we appreciate you being here, and you win the Patience Award for today. Thank you for having along in the green room.
Thank you.
So the question of the day, what's on the top of your mind today as we sit, you know, in month 3 of this adventure?
Yeah, I really think it's been interesting, the perspectives of all of our mutual friends and colleagues, you know, that have gone before me, and thinking about, you know, just how long this recovery could take. And if you just stay with the general theme around it being 2023, and you look to what's been happening in our industry, you know, this has really only been a phenomenon that we've seen for the last 2 months in terms of shelter in place and the like. But if you see the public companies in our space and what they've done, this has been a mad dash against this recovery timeline for liquidity and cash burn that you know, companies are trying to solve for. So the very front of my mind, it's thinking about this, you know, how do you compartmentalize the timeline for recovery with what does that actually mean from a cash burn standpoint? And then, you know, thinking about what companies have been doing in terms of shoring up their balance sheets, you know, during that time period. The second thing I'm thinking about is really the great opportunity that we have in front of us for significant structural change in terms of the operating model for our business. You know, I think, you know, and I'll just, you know, give you a frame of reference. We've had kind of very, very benign RevPAR growth now for, really the last 2 years. Again, significant cost increases. And there really hasn't been much done structurally to the operating model that allows that to be far more imbalanced. And there's a window of opportunity that we're all in today in order to change that. So let me go back to the first topic point and talk about recovery, liquidity, cash burn. If you look at kind of, the public companies that clearly have the most transparency, you can they serve as a proxy for the industry. They've really looked at the balance sheet and said, we need 2 years worth of liquidity at current numbers in order to, to have enough cash on our balance sheet to give us that run rate. So that essentially means through the second quarter of 2022 is what they're really looking for. Now that might be too much. It might be just enough, but that's certainly what they've undertaken. So you've seen situations whereby capital has been drawn on all lines of credit. They've been the first bond deals ever to be done in our industry that my dear friend Tom Baltimore did with Park Hotels is pricing today. $550 million unsecured gives them 2 years of run rate. And this all goes back to Dan Hansen said something that I thought was really spot on. He's one of the great leaders in our industry. And he kind of characterizes it to say, look, in our space, and this was on his quarterly earnings call, you have to have a $25 RevPAR in select service, 25% occupancy at $100 in order to break even at the operating line in a current environment like we're in today. And that kind of makes sense if you just think about kind of just the cost of keeping a hotel open, breaking even before debt service, and fixed costs. Well, that number moves, he said to 50% at $100. I think it's probably closer to 60% at $100 with really, call it 1-to-1 debt, not really more than that, in order to kind of break even after debt service, and what a normal debt service, less, not including amortization, et cetera. So if you just think about that for a second and you look at a recovery timeline, when do we get to between 50 to 60% occupancy at $100? When does that happen? And for a hotel and kind of, representing that, it'll burn through, after debt service, about $50,000 a month. Now, today, that select service owner that Arne talked about at the very beginning that he's really concerned about, and Dave Johnson said the exact same thing, they've received PPP loans, which really helps. They've gotten forbearance for the next 90 days, and perhaps that can go to 120 days, perhaps, even just a little bit longer. And they're able to use their FF&E reserves in order to kind of deal with, the cash burn. All of those things will tend to run out here, likely by the time we get to the fourth quarter of this year. And so we've been, speaking to a lot of owner operators in our space that have come to us about, providing them capital that, gives them a lifeline through next year. Because we believe that the run rate, will continue to go. And you'll ask me a question that you've asked kind of everybody else in terms of where are we in the recovery here. But if you just say that 2023 is what we've got to get to, there's a lot more time where there's going to be cash burn. And there's a lot more time in which you have to have liquidity. So I think, for our industry, we can really look at the public companies as a proxy and make sure that, there's enough liquidity there so that you're just, not betting on the fact that the industry will recover by the end of this year in order to get to that 60% occupancy at $100 for an average hotel, while, kind of the liquidity is kind of run out. I think, one of the great comments, and, I lived through this like many others, for 27 years in our business across multiple different, cycles here. And there's always a decision that you have to make is that do you invest a new dollar into something, versus investing into, to something else. And that's, I think, where, a lot of owners in our space are going to have to start making decisions here sooner as opposed to later as we get towards the end of the year when some of the easy liquidity is passed.
Let me jump in here for a second then, Mit. What's the toughest decision an owner has to make today?
Well, the first thing is that they've, if it's a CMBS loan that they've got, do they keep making the CMBS loan payment or do they allow it to go into, master servicing where, some of the protocols there are very, very punitive. And I think, for so many, People used to ask us all the time, who do you compete with? And most often we compete if we're trying to buy a hotel from a local developer, owner, operator, the CMBS market. You finance a hotel at 75, 80% of value, you cash out all your money. And that's, in a very, very good scenario. So that's the tough decision that they've got to deal with, which is, having to, make that determination there. I mean, look, a lot of the hard decisions in terms of layoffs and staffing, rehiring, all of that, has continued to take place. Those are some of the really big decisions early on that they have. But right now, it's every dollar liquidity. Where does it go?
Yeah. Okay. Transactions this year, Mitt, will we see any?
Yeah, we'll see some. I mean, Mark, look, Mark is really one of the very best in the business, as you know. Elliott, who you just spoke with. And, I think, again, if you're in this business, you have to be an optimist. And so if you're an advisor or a broker in this business, you too have to be an optimist, right? You have to say, here's what values are going to be. There will be transactions, but one of the reasons why there hasn't been any transactions yet is that if you think about the numbers that they're given, hey, it's a 40% discount. Hey, it's a 35%, 30% discount. Well, that's basically the equity that most owners have in it. So why is there a necessity in which to trade, an asset if, the fact that essentially all you're doing is covering the equity? It's a big question. Right now, if you talk to lenders in the space, balance sheet lenders, bank lenders, debt funds, mortgage REITs, the real question that they're worried about is their dollar good, right? And so think about it. There might be a mezz piece in front of that, and there's definitely equity in front of that. And they're worried right now is that what is the mark in terms of their loan? It just tells you that there's more to come in which from a time frame, to go forward. Let me add one comment on the second piece, the structural change in our business, because this is really important. There will be a housekeeping change in operation. One thing that's really important to note is that this isn't all of a sudden hotels are clean. We've always been the safest form of accommodations in the entire lodging universe. And so when you think about the chemicals that are going to be used, that are being used today in order to clean our rooms and to ensure guest safety, many of them are the exact same chemicals that we were using in our hotels in 2003 when we were protecting our guests from SARS. So this has been something whereby health safety has always been a cornerstone for our industry. Physical safety that has as well. I think it'll be interesting to watch how the alternative lodging universe plays in that realm. We will really be able to, as a industry, be able to promote guest safety in a meaningful way. But go back to the cost environment, something that again has been a real important discussion topic between the brands with brand standards and owners. We now have an opportunity to certify, for a guest that their room has been clean when they check in. It is something that is very clearly a direction that owners and brands need to work on together, such that housekeepers, and room clean during a stay starts, going away. And we end up in a situation whereby we certify a stay before they come in, and certainly between cleans, between guests there. But during the stay, we're able to not have people in their room. That helps guest safety. It also takes out a significant cost. Breakfast buffets, the eggs and all the things that you put underneath the buffet with the cook and the like in a select service operation was never really supposed to be there to begin with. Going back to a grab and go option that is healthy, that is safe, and that also satisfies that customer is also direction. There is a significant group of owners and operators in our industry that have coalesced around this topic with the AHLA, with the HOLA, coming together with direct lines. Each of the brands have done a great job setting up these committees about the new standard of operation going forward. This is a great opportunity that we have that we cannot miss to change the paradigm of our operating. And it's not about commoditizing our business. It's about doing the right thing for our future profitability.
All right, great. 30 seconds.
Yep.
Are we in a recovery? If not, when?
Well, of course, the weekly stats will tell us that things are getting less bad. But I think as everyone has kind of remarked, and certainly what everyone, you know, on Zoom today, you know, can acknowledge is that it is going to take some time. Remember all the baseball analogies we used to get tired of, you know, sitting around and having what inning are we in, what inning are we in? We really do not know. We just know that it's going to be long. And I do believe that the combined benefit of having an industry that is more together than it ever has been to fight on this together. We're going to have a therapeutic. We're going to have a vaccine. We will leave our homes. We are going to travel again, and this industry is going to be back. It is just going to take some time for us to get there.
All right, very good. We may only be in batting practice right now, Mit. We might be talking about this for a while.
We might.
So, Mit Shah, thank you very much for being part of it and sharing your insights to close the program. We really appreciate you being here, Mit.
Thank you, Jeff. It's been a pleasure, and thank you all that joined us today.
We'll see you.
Take care.
We're going to close out here. I'm going to try to share my screen and let you know that our next event, if I can get this going here. Here we go. There we go. Okay. Well, yeah, okay, that'll work for now. So our next event is going to be June 3rd next week on Wednesday in Hong Kong. That means Tuesday night Eastern time at 9 p.m. For everyone here in the States. You can certainly tune in for that to hear what's going on in Asia Pacific in a similar format for this. The next ALIS event will be on June 17th. There will be a Caribbean and Latin America one on June 10th. So thank you very much for tuning in. Thank you for staying with us through the end. You will receive a survey as you log out, and we'd appreciate any feedback that you can provide. Have a good day, stay safe, stay healthy, and I wish you great prosperity as we get out of this thing. Thank you.